My name is Hugh. I'm the President and CEO of Revival Gold. I'm really excited to come to you today to talk about our Mercur Gold Project and the preliminary economic assessment that we've just released. This project is on a brownfield site, and we are moving quickly now through to a production decision within the next 2 years. There is a lot of interest in this project from investors and corporates. The PEA that we've just released, we'll go through the details of that, but what's really exciting about this is the fast path to production and the fact that we're on private ground in the domestic United States, where there's a real push for domestic production opportunities. We benefit from a relatively low-risk site with existing infrastructure, and that lowers capital cost and lowers risk. And I don't want to forget the most important thing here. We are in a rising gold price environment with exceptional exposure here, some 30 ounces of gold for every 1,000 shares of Revival Gold in hand. I look forward to presenting the project to you. And a quick background on Revival Gold. Of course, we are a developer in the Western United States now with 2 gold projects, 6 million ounces of gold, and a targeted production of 160,000 ounces a year from our projects from open pit heap leach operations. We are located in the Western United States. This is a very good place to be for gold mining today, and we're led by industry veterans, not only that have run projects like these before and built projects like these before, but have also delivered literally hundreds of millions of dollars of investment return for shareholders. We have about 209 million shares outstanding for a market cap that sits today at about $80 million Canadian. Our trading metrics sit at $8 an ounce in the ground and 0.1 times NAV. I'll talk through some of the PEA results that is the subject of this report here, and how we get to that 0.1 times NAV metric. Shareholder ownership is shown on the right-hand side of the graph, with about 50% of our ownership in institutional hands, as well as the new corporate investor in Revival Gold, Dundee Corporation. So lots of validation for our company and what we do. And you can see on the far right of the slide here that we're trading with about every 1,000 shares of Revival Gold representing some 30 ounces of gold in the ground, with those 6 million total ounces of gold in the ground and about 209 million shares outstanding. I mentioned on the outset that this is a veteran gold team. On the right-hand side of the page here, you can see our non-executive chairman, Tim Warman, built Pan Mine and the Pan Company, which became Fiore and was sold to Calibre a couple of years ago. Some of our other directors have been involved with companies like Andean, which was built up from 100 million market cap and sold to Goldcorp for $3 billion. Others on our board include Norm Pritchard, who is the former COO of Eldorado, and Larry Radford, former COO of Hecla. So we have a team that's done it before, not just in terms of building and operating mines, but also in terms of delivering value to shareholders. Myself, a mining engineer, president and CEO of the company, and worked about 35 years in this business, developing growth in gold. The rest of our team includes our VP Engineering Development, John Meyer, who's a wonderful gentleman, ex-Barrick, and has led the work on this PEA, which we'll talk about. Our CFO, Lisa Ross, our Chief Geologist, Dan Pace. Dan was a co-discoverer of the Silicon Project in Nevada. Lisa Ross worked through the Kirkland Lake buildup, which of course was a huge success, acquired by Agnico in the recent past. We are located in the Western United States. This is a very safe geopolitical part of the world to be mining. And there is, of course, a real emphasis on domestic production in the U.S. today, with recent executive orders driving that agenda. Our projects are synergistic, similar operating situations, And our team is all based in the western U.S., our operating team that is, and technical team. And so we're right on the projects day in, day out. I mentioned that 6 million ounces of resource in the company on the outset. You can see the graph on the right shows the distribution of those ounces. Approximately 3.2 million ounces are in the M&I category, and 2.8 million ounces are in the inferred category. We have a lot of exploration potential, but with a base of resource sitting at 6 million ounces, that's a lot of leverage to the gold price. And I would emphasize that this is 100% gold. This is not gold equivalent, it is 100% gold. Our Mercur project is pictured here in the distance, just outside the city of Salt Lake. You can see on the map at the top right here that the project is about an hour's drive from the city of Salt Lake, an international airport there, and yet far enough from the city on the other side of the Okra Mountain Range such that we're not disturbing local residents in any form or fashion. In fact, this is a past-producing gold site from many years ago. Back in the 1870s, metals were first discovered in this area, and the most recent mining activity took place in the 2000s. About 2.6 million ounces of gold produced from this site, which makes this a proven past producer. And some of that gold was at quite high grades. On a relative basis, 7 grams per ton gold. Almost a million of those 2.6 million ounces of gold were of that tenor. We are on private land for our resource and most of our infrastructure, which makes this a really advantageous permitting site for Revival Gold. So the PAE metrics, headline numbers for our Mercur Gold project are presented here. 66 million tons of material to be mined, and about 95,000 ounces a year of gold production, 10-year mine life. And really importantly here, we've got about a 27% after-tax IRR and an NPV that's $294 million. This is a really exciting project from a permitting point of view, with just 2 years to get through the major milestones and be in a position where we can turn a shovel to construct. But of course, we're not just investing in these projects for the cash flow that can be delivered at a long-term gold price of the assumed $2,175 gold. At $3,000 gold today, this project has a net asset value that would be north of $750 million. So lots of leverage, not just in terms of leverage to exploration, but leverage to an increase in the gold price. And that, of course, is why investors should be interested in development projects and companies like Revival Gold. We offer superior leverage to the metal. Here's our mineral resource. For the technically minded viewers, you'll note that this is over 50% in the indicated category. The rest is in inferred. And that's a function of the fact that we've got a lot of drilling on this project. Some 3,000 drill holes, 280 kilometers of drilling. You can see pictured in red shading the area of the resource on our property position. The total property position is almost 7,000 hectares, so it's a large property with a lot of exploration potential beyond this current resource. But that's our focus in the short term here, is to move this resource through to free cash flow. The next steps with this resource will be to do some infill drilling and some metallurgical test work. And you can see in this cross-section slide in the rover area at Mercur that there is these are shovel pits, some 150 meters deep, and relatively straightforward from a mining planning point of view. And we can pursue the additional drilling that's going to be required here with reverse circulation drilling, which is a lower cost method of drilling, and that makes for an efficient process to upgrade the remaining resource and move ourselves to preliminary feasibility study and feasibility study. The mining and processing on this project is contemplated with really standard approach of open pit mining, 3-stage crush, and then leach with recovery through a standard ADR facility. It's a plan for it's about 18,000 metric tons a day in production, and you can see a picture of one of the types of haul trucks that we will use for this project. These are 136 metric ton haul trucks and a relatively straightforward three-stage crush and an average 75% recovery from the ADR plant. The production schedule is pictured here on slide 15. Again, we're producing typically 95 to 105,000 ounces a year of gold, and the average will work out to about just over 95,000 ounces of gold per year over the 10-year mine life. The average strip ratio is 2.8 to 1, and the average recovery I mentioned earlier at 75% drives really attractive economics here. And I'll come back to that in a moment, benchmarking against some of our peers. Here is the capital cost summary on slide 16, about $208 million, including the working capital and the associated prepayments on leased equipment. That's something that our team has been really careful about organizing in this capital estimate. It is a full capital estimate for the project, and it will take on board all of the items for pre-production. Project site is a really advantageous for redevelopment, and this is part of the Revival Gold mantra. We really focus on these brownfield sites where production can be efficiently resumed, and where we have lots of data and knowledge around the site to de-risk our plans going forward. I want to emphasize that we have a power line to site, grid power, paved road to site. We have access to water wells nearby, and we are about 30 minutes drive from a relatively large community of about 40,000 people, so no requirement for a camp and no requirement for the expensive travel and associated support required for a camp. That makes for an efficient operation. You can see the layout of the proposed project in the top right of the screen. What we have is two mining areas in the main Mercur area and in the South Mercur area, pictured in gray, circled with red. And then the infrastructure that we'll build around this will be two haul roads to a centralized processing site and heap leach area to the left of the screen in yellow gold color. I mentioned earlier that we're in a very good competitive position with this project. The capital intensity per ounce of gold produced is shown in the graph on the left side of the page at $219 per ounce of gold production. We stand up very well compared to the peer projects in the Western United States, and that gives us a huge advantage in terms of delivering efficiency for our investor dollars along the way here. And likewise on the AISC side, we've got an all-in sustaining cost of about $1,360 an ounce, which compares very favorably to our U.S. peers. And you can see on the graph on the right also the grades of these projects. And again, our grade at 0.6 grams per ton gold stands up very well. That's part of the reason why we have this advantageous $1,360 AISC cost per ounce. The cumulative cash flow from the Mercur Gold Project works out to about $500 million at $2,175 gold. And you can see that distribution of free cash flow on this figure here, as well as the gold production. And so this is a project that's relatively straightforward, relatively quick to free cash flow, and there's lots of cash flow generated even at much lower gold prices. The permitting on this project is relatively straightforward, and that's another big advantage for Revival Gold's Mercur Gold Project. We have some 2 years of permitting to do. It will mostly focus around cultural and wildlife studies, and these are relatively limited because this is a historic past producing mine site. It's in a arid location, so there isn't a lot of well, there's very little water, which makes for little in the way of water studies, both subsurface and atmospheric. And from a wildlife point of view, we're not aware of any endangered or threatened species here. Again, this is a past mining site. Lots of past study work gives us confidence to know what's here and what's not here to be concerned about. Most of the activities that we're going to do are around cultural survey work, which relate to the past mining activity, not something else that would be more challenging for us. And so this gives rise to a relatively efficient process on private ground with the state agency known as DOGM, Department of Oil and Gas and Mining, and that expected 2-year timeline to complete. I do want to talk about risks and opportunities on the projects. Investors need to know about both of these areas as we move forward on the project. First of all, the focus for our technical work going forward here will be on, of course, upgrading inferred resources to measured and indicated category for the completion of PFS and FS. And that will involve doing more metallurgical test work, and it will involve improving on the modeling to date with respect to carbonaceous material. We've got a lot of planning around these two aspects of the project already, but we will need to do more. And also, because of this past history of the project being an extensive site of mining activity, historically, we do know that there are underground workings, and we'll have to work around the expected 20 to 30,000 tons of material that would have been taken out of the total 66 million tons of material from underground workings by the historic miners. And so that's something we'll have to work around as we move to the PFS and FS study work. On the upside, in terms of opportunities, I would say we're really excited about the exploration potential here, not just to expand on the existing resource, but also in new blue sky areas. This is a Carlin-type system, and it has a lot of potential around the horizontal stratigraphic layers of rock that are very prospective for gold mineralization, and I'll show some of the slides in respect of that in a few moments. The other opportunities around this project relate to the existing leach pad that was mined previously, processed previously, but has more gold in it to be recovered, and also the waste rock from prior operations, which in today's world is very attractive and which we'll want to explore for future potential processing or reprocessing. Again, there's lots to be done here in terms of upside from exploration, from optimization, and we'll cross through those steps as we progress to production. I want to step back and speak about the exploration opportunities at Mercur. We are in the Ochre Mountain Range. This is the host range for the large Bingham Canyon Copper Gold Project, which you can see on the top right side of the screen. This is a massive porphyry deposit, and of course the system that generated that porphyry is also gives rise to other deposits like the Carlin-type deposit that we see at Mercur, and which we're exploiting with this preliminary economic assessment. Those types of geology give rise to big deposits, and they are the focus of most of the mining in Nevada today. Mercur is one of the few Carlin-type deposits outside of Nevada, though still in the Great Basin, and it's one of the only ones that's independently owned and controlled. We have, as I mentioned earlier, about 7,000 hectares of property here, a strike of about 14 to 15 kilometers, and most of the mineralization on the right side of the property to date, with a lot of potential on that west limb of the anticline, which makes up this system. Here are some of the target areas that our chief geologist, Dan Pace, is particularly excited about, of a blue sky nature. There are 4 or 5 of these across the property position. I'm going to talk about a couple of them. South Mercur, which is at the lower end of the property position. You can see the plan view shown here on the left and a cross-section view shown at the top right. These are sedimentary deposits, so we can track the sedimentary unit that is permissive for gold mineralization to the northeast. At the right side of the page here. It extends for about 900 meters past the existing drill data, and we know that it's a permissive system for gold mineralization because we've intersected the gold mineralization to the west, to the left of your screen, and then in terms of the pinpointing the places to drill within that system, why we've got geochemical signatures from mercury that comes up through the fault structures and gives rise to anomalous indicators of potential mineralization across that 900 meter target area. So we will definitely want to be getting into that with drilling in the not too distant future. It is not a deep target, something about 250 meters deep at the deepest, and that's a very interesting potential complement to our existing South Mercur resource. There are other areas and prospects that our geological team is interested in. You can see a cross-section through the layer cake of mineralization and geology at Mercur here, and the deeper potential for mineralized zones beneath our Porphyry Ridge target area, and also in our Silverado, West Dip, and West Pediment areas on the western limb of the property area. These are circled in purple shading here: Silverado, West Pediment, and West Dip, and all within proximity to the existing infrastructure as part of our current plan, and open for exploration. The path forward for Revival Gold from here is really to march towards free cash flow. Our first phase opportunity is with the Mercur Project. That is some 95,000 ounces a year on average over a 10-year mine life. Next, we'll bring on the first phase at our Bear Track Arnett project in Idaho. That'll take us up to about 160,000 ounces a year of gold production over the next 4 or 5 years. And then beyond that, we see opportunity at our Bear Track Arnett system for underground mining and processing, which could take us north of 250,000 ounces a year, all from our existing portfolio, all within our existing property position. The summary NAV or net asset value is pictured here. Revival Gold total at $500 million, and that's at a $21.75 gold price for our 2 projects, increasing to $1.2 billion at $3,000 or spot gold today. That makes for a really attractive opportunity for investors with lots of catalysts ahead as we progress towards free cash flow and develop our portfolio. This is a unique portfolio of assets, stands up very well from a value point of view, both in terms of NAV and, as shown here, on multiples per ounce of gold in the ground. And I want to point out that our exploration team over the last 7 years has been responsible for 2 of the largest gold discoveries, top 10 gold discoveries in the United States in the past decade and a half. That's Bear Track Arnett, now 4.6 million ounces, and Mercur, 1.4 million ounces, for a total of 6 million ounces between the 2 projects. Again, the grades of these projects stand up very well. The cost of discovery stands up very well, and you can see here the size stands up very well. Just to summarize, Revival Gold is at an inflection point with 2 development projects moving towards 160,000 ounces a year of production, future production, as we progress through PFS and FS on our Mercur Gold Project and continue to progress our Bear Track Garnet project, there's a lot of value to be surfaced for investors, a lot of gold exposure with 100% pure gold resources, excellent valuation, a team that has done it before, and the backing of some almost 50% institutional and corporate investors. We have solid support here in the stock and for our future development plans. Thank you for your attention, and welcome anybody who has questions or wishes to get further information to reach out to us at Revival Gold, our website, www.revival-gold.com. Thank you.